bro. So it is time to do a Group A final estimate. So we already have all the numbers for this week, and in just a couple of days, the announcement is coming, and we will review every stock. We will spend the most time on TSLY, but I also have some very juicy things that I've cooked in the last few days. I've been hard at work improving the YieldMax P&L tracker. So before we begin, bro, very much would appreciate if you smash the like button, subscribe to the channel. Also, I've been getting some comments that I talk too fast. And so what happens is I speed up the video because I personally think I talk too slow. And so let me know in the comments below if you want me to make the video slower, because when I speed it up, it's way too fast for you. Or if the speed is normal, I would love to know that. And also, guys, this is not a financial advice. I'm not a financial advisor. So I just do this to show basically my work and what I use to sort of estimate what I'm going to get from my YieldMax funds and how to allocate my money. All right, and last but not least, bro, we are, first of all, having like a 15% launch sale on the side, but because I love my YouTube subscribers, bro, I'm having a special promo code until the end of 4th of July week, 25% off for life of the YieldMax tracker and DRIPCalc earnings estimates and earnings reports and all of that good stuff. So these are the DRIPCalc earnings. So you can see like all the stuff, the revenue, the EPS, cash, expenses, revenue by segment, estimates, all of that good stuff. And of course, the YieldMax tracker. Okay, so with that said, let's begin. TSLY is the big boy for this week. And also, it has been popular in the very beginning, but since then it's lost some of its, appeal. A lot of people are hating on TSLY, and I personally kind of like this stock. It's my first one, obviously, but I'm not selling it. And in fact, when Tesla dropped last week, because of the bromance between Trump and Musk kind of falling apart, I picked up a few more shares, and honestly, I'm looking to pick up even more. Now, I don't do massive buys because like every time I buy, stuff just drops. So I kind of slowly DCA. I picked up a few bucks from APLD run up, and so I put it in TSLY. And also the reason I did it because like this stock was almost 960 about a week ago, and now it's like $8, bro. Like you're getting 20% discount just on that. And then like I think the dividend estimate this week will be, well, the dividend this week will be quite good. That's my personal opinion. But let's see what we have on docket for TSLY. Okay, so we made $1.53 for this cycle, and that's that's a lot of money, bro. That's almost like 20% P&L profit per share based on the current price. That's a crazy return. And yes, we are down on the synthetic minus $1.06, and it's like $134 million, but we're more interested in per share because the total amount basically also depends on the shares outstanding. So anyway, let's take a look at the estimate. By the way, we just updated the IV, and based on the lower IVs for TSLY and most other stocks, the IVs are just crashing right now. So the estimate went down a couple of cents. It was like 81 cents. Now it's 78 because of the lower IV, and that might change tomorrow. And I'll talk about the actual end of the cycle, and right before the dividend declaration, there is often a run up in the shares outstanding, and I'll show you what I mean. I will go back to msty from last week, but there was a crazy run up in our outstanding shares. People were piling in, and that basically diluted the dividend for everybody. But anyway, so the algo is predicting 78 cents through 95.5. We call it 95. Okay, and so I would say, honestly, bro, I think we're getting about 85 cents. My initial thought was we're getting 90 cents or more. But here's the thing. 90 cents would bring us close to 150% yield. And that's way too crazy, even for TSLY. Okay, and so they're not going to give us 95 cents or 90 cents because it's just going to look way too good. And I think next cycle, people will be expecting such a high IV. And, that's like more than double of the actual Tesla IV. All right, and so yeah, we're not getting 90 to 95 cents. That's almost certain, especially like we've seen what happened to Cony, where like they paid 50% of its net profit, of its net income. Okay, but situation with Cony was a little bit different because they've had a pretty bad cycle right before the last cycle, and so they've been losing money. And Tesla wasn't doing so good. This year they're down $2.36 per share since the beginning of the year. Now this is not fiscal year, and fiscal year kind of should start over here. I need to adjust this. And I don't really exactly know when their fiscal year starts, but from one of the interviews of Jay Petruccelli, their like big manager, big boss at YieldMax, it sounded like their fiscal year starts somewhere in October. Okay, and I'm not even sure if it's for every stock. TSLY, because it launched like end of October, November, maybe it's slightly different. Maybe we should start in November. So I have to figure it out, but I like to do like year-to-date P&L. And so far they lost $2.36 per share. And by the way, so this amount right here, it's not cumulative of the P&L for the cycles. It's basically shares outstanding. By the way, guys, bro, I gotta get rid of this dollar sign. It's just like bugging me. I'll take care of it, but this is not dollars, this is shares outstanding, okay? So we take total P&L for the year to date, so call it 300 million, and we have 120, call it 127 million shares, divide this by that, and we get 236. So this amount is not cumulative income or loss per share, but this amount right here is cumulative, okay? It adds up all the monthly totals, and this is what we get. So yeah, anyway, but what I was getting is that last month was also pretty good for Tesla or TSLY, and they paid 76 cents per share, which was pretty good yield. And but back then stock was like around $10. So now they made more money this cycle, and they probably, in my opinion, they should pay more than 76 cents, especially that they earned basically double this amount for the cycle. They earned more than they earned last cycle. So I'm calling it like 80 cents to 85 cents. Okay, and that falls within the algo estimate. And the percentage or yield on that is quite insane. 126 to 154%. That's crazy, bro. And our IV-based estimate is 41 cents. They're not going to pay that because they made basically 3.5 times more than the IV estimate. So they had a pretty good months. So let's look at all trades. $194 million. And by the way, bro, this is one of the things I cooked for you. Like, I'm super psyched about it. So in the last update, I showed you the shares outstanding chart, but now what I did is I added these dividends here that coincide, that you can basically see on the timeline their dividend payment and their shares outstanding, okay? And so you can judge basically, like you see over here, there was a run up from 118 million to 126 million run up in shares outstanding. And we might see the same thing, like you can see it's already happening, starting to happen. But part of it is because the Tesla price dropped last week, like it dropped 26% at some point. Right now it's like down 20% for the, for the last 10 days, give or take. It was 370 at some point a few days ago, and now it's a pre-market or like late overnight market 290, call it 295. Yeah, so it had a massive correction downward, and that resulted in TSLY price also dropping from like almost $10 down to 8. At some point it was like 760, 755. I should have bought a little bit more, but that was like overnight or after market, and I was a little bit busy. Anyway, bro, I'm spending a lot of time on TSLY because this is the biggest fun. This is the first one, and the rest of them are kind of boring, but I'm gonna go over them. But yeah, basically, bro, I added this shares outstanding, and now you can see the dividend chart right in here. And this is where it's really cool to see this. Let's go back to msty. Like, msty is old news, but we'll see why. I think they could have paid more, but because of all the new people coming in. So let's open this chart. Like, look at this right before the dividend announcement. So that was on 6/4, and on 6/3 we were sitting at 204 million shares. And when the week ended, we were at 192. Okay, that's when I made my video prediction. So I was basing it on 192 million shares. But once they announced, the share count was 224. Bro, that's like 15% increase in shares outstanding right before the dividend. And so like they could have paid 175 that I was predicting, but they saw like all these people piling in, and they're like, yeah, that money will contribute in the next cycle, but right now it's dead money. Essentially, they haven't earned anything from all those shares coming in, but now they have to share the dividend with them. 15% extra shares. That's a big, huge drop on the dividend payment. Or yeah, so that's why I think it's kind of really cool to see like the dividend chart together with the shares outstanding and sort of judge what they will do. And so if TSLY will have another run up in shares outstanding, that might take our dividend down a little bit, and we will know for sure, or like we'll we'll have a much better idea of what's happening right before the announcement, basically on the evening of Tuesday. And that's basically 2 days from now. And then a few hours later, they will actually announce. But even after they announce, people can still buy in. And so that might, but at that point, they will not dilute the dividend. They basically judge on the night before, I think, how many shares outstanding they have and how they have to split the pie. Okay, so the cash position is pretty small, but I'm not sure, like I think this is just cash and it does not include the money market. So I'm not really sure if I should include the money market in here. I probably should, and I'll think about, but over here in our holdings, actually I don't even show the I don't even show the cash positions in here, so because they're kind of not really important, I think. Well, they kind of are, but anyway, so let's take a quick look at the holdings because I don't do daily updates. This is weekly, and so the short calls expiring next week, some of them are 315, that's kind of low, I think. Most of them are about 340, 350, so that's the majority. Some are even, no, this 365, 367, those are buys. There's more buys, 357, 355, 350. Oh, man, I kind of don't like that. Like, yeah, they could pan out, but, you know, the beef between Trump and Musk still ongoing. And at this point, Musk basically capitulated. He deleted all his tweets about Trump being like on Epstein list and all of that, you know, nasty stuff he was saying. And I'm saying nasty not because like, you know, I'm defending Trump or saying Musk did bad thing. Not at all. I'm looking at it from a shareholder point of view. Like, what did he accomplish? Absolutely nothing. And he capitulated, and it took Tesla down 20%. That's like, and now he's having like, he's creating roadblocks for the company because now he's not buddy with Trump anymore, and now Trump will be like, he can get pity, you know, and or not pity, spiteful, and like you know, take revenge on people. Although Trump, like Musk, really helped him get elected with the money, with the campaigning, with X support. But at this point, that love is no more, and yeah, that was basically a waste of effort on Musk's side, and so I'm not saying I'm not happy. It might give us a buying opportunity for Tesla if you're a long-term holder or believer in the company, and it also affects Tesla. So anyway, yeah, I've spent way too long on this stock. So, bro, let's move on. I'll go through the rest of them kind of quick. TSMY, let's go. Let's take a look at that. Very few shares outstanding, so they lost 31 cents a share. Their synthetic position is really nice, $2 up. So the price is $16. That's like, oh man, that's like 12-15% up on the of the share price. So they did really well on the synthetic, but that's unrealized gains, and they may still not win that. Those synthetics expire a month and a half from now, like 40 days from now. So not bad, 180, and the price of the stock is 205. Yeah. All right. So short calls 210, and then they have some, you know, lottery calls for next week. Probably not gonna hit them, but whatever. PNL. So they lost a lot of money for this year to date. Basically, let's take a look at algo prediction. 46 cents to 56 cents. I tend to kind of agree with that. They didn't make a lot of money for this cycle, but they paid a much bigger dividend last month, almost 79 cents. So I think they'll pay somewhere in this range. I agree with Algo. The IV-based estimate is slightly lower, 38 cents. I think they'll pay about 50 cents. All right. So let's move on. Oh, bro, and by the way, while this is loading, another great thing that, well, good thing that I really am excited about is our weeklies are pretty much ready to go, especially YMAX and YMAG. And so I'll make a follow-up video on that for all the weeklies, because this is going to be way too long if I include weeklies in this one. But YMAX and YMAG are pretty much ready. Also was kind of working all along. These oddballs I haven't checked yet, but they should be working as well. Okay, so we have the data, we have the estimates for the weeklies, and we'll make a separate video. Okay, IBIT, I want to make a separate video on my like fresh look on IBIT. I really hated IBIT before because they were trading options on BITO, which was trading futures on Bitcoin, and you could just buy BITO yourself, collect better dividend, and sell your own call options, because like BITO was pretty much the same price as IBIT. They were very close in price. And like if you bought YBIT, I'm sorry, bro, YBIT, not IBIT is the Bitcoin ETF. YBIT is the YieldMax ETF on. Now they trade IBIT options, and I'll show you right here. So they sell calls on YBIT, and they have, this is sort of a synthetic position. They have a long-term deep in the money call. It's not really synthetic. They also do some MBTX. I have no idea what that is. But anyway, I want to make a fresh video, take a deep look at this ETF. But so far, I was not a fan of it. I think it's a crappy ETF. Year to date, it lost to BITO, it lost to msty, it lost to YBIT itself, especially after you could sell your own call options on YBIT. Anyway, wasn't a fan, but they lost 41 cents in this cycle. Again, because they don't have a synthetic, it's really hard to judge. I'm not really sure how much they paid for this call. And so our algo predictor doesn't really know what to do about it, because one of the inputs into algo is the synthetic position, but since there is no synthetic, it's kind of like, bro, what do I do? They paid 87 cents last cycle, so IV estimate is 33 cents, and I think probably the algo estimate is quite in range. Maybe they'll pay 50 cents, because Bitcoin at some point was, bro, it was like $112,000. It hit all-time high while we're still in territory. Anyway, yeah, so kind of agree with the algo here. But again, since there's no synthetic position, it doesn't, it gets a little bit confused, but still, I think this is more or less accurate. GOOY. So Google was having a good day as of late, but the fund, they always perform kind of meh. And let's take a look. So they're up on the synthetic $1. They paid 35 cents, 34.5 cents last cycle, and they lost 50 cents this cycle. Let's take a look at rolling P&L. They're down slightly for the year. Not good, but I think the NAV erosion on this fund is much greater than the loss per share. 67 cents, 68 cents. All right, let's take a look at Algo Predictor. Wow, bro. I think they're going to pay more than this. I mean, I think they're going to pay 35, 37 cents. Let's take a look at their recent payments. Yeah, they basically didn't pay so low. Last time they paid this low, the 28-cent range, was essentially in November, 28.5 cents. Yeah, bro, I think they'll pay more. This estimate is very close to the IV. I think they'll pay more because they're up on their synthetic quite a bit. And so, yeah, I would say like 40 cents, give or take. So yeah, let's move on. OARK. So I have a poop rating on OARK. I'll show you later. But it's been doing a little bit better than other poop stocks or poop ETFs. I'll show you what I mean real quick. So in this table here, you have poop rating on these three boys. So MERN is like the worst piece of poop. And then AIYY. But OARK has been actually doing well for the year. It's up 15% if you didn't reinvest the dividends, and up 18% if you reinvested the dividends. But yeah. Oh, by the way, bro, I'm gonna integrate all those algo predictions into this page. So yeah. Anyway, let's move on. OARK. They made dollar per share. They're up on the synthetic. IV is pretty good, 46.5%. Let's take a look at the estimate, 51 to 63 cents. And that's like almost double what they paid last cycle. Quick look at rolling P&L. They lost back 20 year to date. Not too good. And they haven't been paying high dividends. So yeah, I don't think they'll meet this amount. I think the algo estimator is a little bit optimistic, mainly because I think it would be correct if we didn't have all these losses year to date. So $1.20, that's a lot. I think they'll pay somewhere around 45 cents this cycle. That's my guess. Let's move on to SNOY. Oh wow, bro, SNOY is sitting pretty. They made $2.23 per share, and the stock is 17.63. Wow. Maybe I should get into SNOY. I don't know. And their synthetic is sitting pretty. IV is kind of meh, but it's just not a very volatile stock. Quick look at IV estimator. Yeah, I think this is quite accurate. I think so. Let's take a look at rolling. They're in the green. That's a good sign. And last cycle they made $1.74 and they paid $1.30. So yeah, I think we'll get about $1.50, $1.60 from this bad boy, and that's gonna be over 100% yield, bro. That's amazing. Maybe I should pick up a few shares of SNOY. Let's see how they did overall. Yeah, their average estimate is about 60, 70 cents, sometimes 80. Over here it was kind of low. Yeah, this is not gonna last, but probably they'll pay you like $1.50 this cycle. Finally, Zoma. I think this is like one of the worst, not worst, but like just kind of doesn't make sense to have type of ETF. Just like BRKC, the Berkshire ETF they just came up with. But whatever, let's take a look. They made 3 cents, a whooping 3 cents per share. Bro, they're doing well. And they are down 4 cents on the synthetic. I had ExxonMobil. I was buying it when Biden was like hating on oil, and this stock was like $55. That's when I was buying. But I got rid of it early in the year. I think in January I got rid of it and bought Palantir for 65. Anyway, the predictor, the algo says 26 to 32. Yeah, I tend to sort of agree with it. The IV estimate is 23 cents. I mean, bro, probably very few of you actually have this. Only 4 million shares outstanding. Like, Misty picks up more shares in one day than all of Zoma. Okay, so let's not waste any more time on this bad boy. Crash. So Crash is a short ETF on TSLY. So that's probably doing well. Well, no, it's not doing well. Even though like Tesla crashed, Tesla crashed. These guys are still losing money. Like what the hell? They lost, bro. They lost like 30% of its share price in one cycle. Let's look at rolling P&L. Wow, they're flat for the year essentially, down 13 cents. Whatever. Tesla crashed and Crash is losing money. What the hell? They've been paying all right the last couple of cycles because Tesla was down and got like over here Tesla was 212, and so they made a lot of money in that cycle. Anyway, I don't think they'll pay a lot. Yeah, I think this is quite accurate. Maybe even, well, they probably won't pay less than IV, so they'll pay somewhere around 24 cents, 25 cents. Okay, bro. So that's it for the week. I don't think actually the short ETFs should be part of this, but whatever, I covered it. Anyway, bro, next video we will be doing weeklies. So YieldMax, YMax, YMAG, OT, and then like the smaller weeklies. And once again, as I promised, here will be right here somewhere will be the promo code 25% off, bro, for life. And so like even if or when we raise prices or when you renew, you're gonna keep that price. All right. So that's our promise. And like I said, this promo code will expire after 4th of July weekend. And so take advantage right now. This is a launch sale for the YieldMax tracker. Okay. And again, bro, thank you for watching. Smash the like button, subscribe to the channel. Tell me what you think about these videos, if you want them to be faster or meaning like shorter, because I mumble too much sometimes. And also the actual speed of the video, if you want me to go a little bit slower when I render, because like I think I talk kind of slow, and so on the rendering side, when I make the video, export it, I speed it up. All right, so tell me if that's way too much for you, or if it's annoying. If you want me to go slower, I'll reduce the speed, and all of that good stuff. Let me know which one of these stocks you own, how many shares. I would love to know that. By the way, bro, so I'm gonna put a feedback form over here at the bottom of this tracker, and you can essentially check it out exactly how it works. I put a demo on this tracker basically for Zoma. You see all these reports for Zoma, and they will work the same for all the other stocks if you subscribe. But you can essentially test exactly and see what happens. Like you can scroll through cycles, all of that good stuff. The only thing you won't see is this table. This will be reserved for the future YMax tracker, like YouTuber level, and I'll make a few separate special reports for that, just premium stuff. But basically, most of the people don't even need that. I'll make more presentable, like YouTube special features, like bigger text, this hiding of the algo estimate and all of this hiding. Like most people don't really need that. And I'll put another like form. I want to know what you find useful in this tracker, what's most important for you, and based on that feedback, bro, I will move things around. Kind of like if you want to see the holdings instead of like this rolling P&L, because like it's useful, but maybe not everyone wants to see it. I think this is a lot more useful. The shares outstanding and dividend chart. I think we can get rid of rolling P&L, moving down a little bit. The daily trades, they're very important on daily tracking, but when you do a month or a prediction video. I don't think they're that important. So yeah, I'll put up those surveys, sort of to say, and I would like to know your opinion about it. You can also tell me in the comments for this video. Again, smash the like button, subscribe to the channel, and come right back for the weekly ETFs. That video is coming right up. See you, bro.